Yeah, good morning, everyone. So, the conflict between Iran and Israel continued in last 3 4 days. But the positive point is that the oil, which has moved up very sharply on the Friday, is still hovering or marginally down from there by around $1. So that is the key thing to be watched. And if suppose the oil start moving higher, then it can create a problem for the world economy. If it remain over here or come down, then we may not see larger impact on the equity market. As such, Asian markets in the morning are seeing some positive indication. Most of the Asian markets are positive, whereas US market on Friday ended very sharply down, but futures are also indicating a positive trend. Apart from that, the other commodities are marginally up or down, whereas iron ore and steel are marginally up today morning, considering comparatively better data from the US, from the Chinese economy. So overall, seems like market is likely to move in a range in today's trade. We had seen after sharp downtick on Friday, there were some recoveries towards the end. And from there, what we see that the market is likely to remain in range till we get some better clarity from the uh, Middle East region. I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open with a positive opening or say the gap of opening, and we're likely to witness some positive move during the day. Last week, we have seen that the Nifty has touched the fate of 24,470 levels, and from there onwards, we have seen a very strong pullback rally, and Nifty manages to give a positive closing about 24,700 levels, which gives a relief sign on the technical front. Going ahead, as of now, Nifty is trading below the 20 days moving average, which is the only cautious point. If it's break that level, which comes to at around 24,840 on the closing basis, then the positive momentum likely to be carried forward towards 25,100, levels on the higher sides. Uh, for the today intraday purpose, the immediate resistance is placed at around 24,840. Beyond that level, 24,900 levels can be tested, whereas the support is placed at around 24,640. Below that level, we might witness some sort of a selling pressure, which might take a Nifty towards 24,600 to 24,540 levels. So today's the first support, as I said, 24,700 is the crucial levels. We need to keep a watch on that. Coming towards the Bank Nifty, last week we have seen that the Bank Nifty had shown a correction of almost 2%, but on the Friday it manages to respect the level of 55,500 levels on the closing basis. For the today intraday purpose, the first resistance is placed at around 5500, 830. Above that level, 5640, 56300 levels can be seen, whereas the support is placed at around 55,380 and 55,140 levels. On the technical front, as of now, we have seen that the Bank Nifty has touched the trend line support levels, and we have seen a bounce back rally from the same levels on the Friday. Now, the gap support is there, resistance. If it manages to clear that gap resistance level, then we are likely to witness a very strong momentum rally on the higher side, which might take a Nifty beyond 26,200 to 26,400 levels. So the view is definitely positive. If you're getting any dips, one should definitely go on adding these quality counters into their portfolio, but play with the strict stop losses. Coming towards the stock specific, Tech Mahindra really looks very good on the technical front. The stock is well placed above the 200 DMA. Also, the interesting fact that it has given the breakout of the flat pattern, and we have already initiated a buy call. But those who have missed out, they can definitely add on at the current market price as well. Downside, it has a crucial support nearby 1600 levels. So, by keeping that as a strict stop loss, we are looking for a target of 1720 to 1740 levels on the higher side. That's it from my end. I request derivative team to take a call forward.
Yeah, thank you, Swati. On the derivative front, see, highest call base is around 25,000 strike. That was a support area which has been broken, and Nifty's come down Now that has led to a lot of selling pressure in the past couple of days. Importantly, now 24,500 is an important support level. So if that is broken, we can see further selling coming in Nifty. Until that happens, Nifty will remain in range in between 24,500 to 25,000 levels. The other indicators have turned a bit negative, and we have to again see how they go on from here. So we've got to track them consistently for the next couple of weeks or so to see, if they again continue to become negative. As of now, it looks like Nifty is going to be in range of 24,500 to 25,000 levels. From the stock specific front, most of the stocks witnessed selling pressure, but we see banking counters. They recovered in the second half of the session, and expect banks to continue to hold the fort. Some of the banks are still low on open interest, especially the PSUs, so they can probably do well. Also, oil and gas stocks, especially ONGC, Oil India, can do well. They've seen long built up in the past few trading sessions. So yeah, look out for the same. That's it from my side. Like to ask the fundamental team to take over, please.
Thank you, Nirav. Good morning. There are few updates from the pharma side. US FDA had conducted inspections at various locations for a couple of companies in the last few weeks, of which Natco Pharma has received one observation for its API manufacturing plant at Hyderabad location. That is slightly negative for the company. Similarly, Sun Pharma is issued with the Form 483 with 8 observations for its GMP facility, which is located at Gujarat. This is negative for Sun Pharma. Further, US FDA conducted good clinical practices compliance inspection at Syngene International's facility located at Bangalore, for which it received establishment inspection report with no action indicated and 0 observations. So that is positive for the company. IOL Chemicals product acetic anhydride has been registered with the with REACH, which is European Union regulations on chemicals and their safe use. The certification allows the company to export acetic anhydride across all the countries in the European Union. So that is positive for the company. So that's it from my side.
Yeah, recently European Union has come up with allocation of import from various countries, wherein India was put up in a common pool of import rather than a specific import, which implies that there will be 25% safeguard duty after minor import. So this will act as negative for Indian steel maker who exports to the US region. Also, stainless steel manufacturers in the stainless will also be impacted because of this. India export around last year export was at around 3.5% of the total production, but generally the realization in European region is comparatively better. Apart from that, the year before that, the export was at around 5%. So it has declined in the last year because of the prices which international was facing on account of China dumping. So overall will have some negative impact on the steel company which are exporting from India. So minor negative impact can be seen into the trade. So that's all from us. Now I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, we are expecting gold prices to open gap up, and prices are expected to test 1 lakh 800 to 1 lakh 1200, and buying on dips is recommended around 1 lakh 400 with a stop loss below 1 lakh. And in silver, to expecting buy on dips around 1 lakh 5,700, 1 lakh 5,700 to 1 lakh 5,500 levels, with a stop loss of 1 lakh 4,000, which is a important support area. So on upside, 1 lakh 7,000, 1 lakh 8,500 is expected, wherein copper one can initiate a buy around 873 with a stop loss of 868, and we can eye a target of 878, 882, wherein zinc yesterday witnessed, sorry, on Friday witnessed a pullback. So might test 253, 54 levels. So buying around 250 with a stop loss of 248 is recommended. And crude oil expecting prices to open gap up, and prices are expected to test 6,400, on upside. So buying around 63.30 with a stop loss of 60 to 50 is recommended. Natural gas too, prices are expected to open gap up, and one can buy on dips with a stop loss of 304 levels, and on upside 330, 335 is the target we are eyeing for. So that's it from us. Thank you very much.